What is going on, everybody? Michael Lewis Hudson, and welcome to a brand new video. So in this video today, I'm going to be sharing actually an older video where I've actually... What's going on, guys? Michael Lewis Hudson, welcome back to a brand new video. So in this video today, I'm going to be sharing with you guys an old video that I did on a previous YouTube channel that I had when I actually owned a commercial mortgage brokerage for a few years. With this channel being helping a plethora of business owners in all facets of life, business, and media, I really thought that this old video was still relevant to this day because it gives you kind of a step-by-step process of funding your business. So if you're looking to fund your business, or you're looking to fund your next real estate deal and you found a lender or a bank that you're looking forward to working with, watch this video because it's really going to give you some detailed information step-by-step on what to expect throughout the process. So hope you guys enjoy it. Forgive me for kind of the bad audio. The quality isn't the best, but the information is pristine. So hope you guys enjoy it. Much love. So today I'm making this video to explain to you one of the most confusing and mysterious things in the commercial finance industry, and that is the commercial loan process. About 90% of business owners and real estate investors who go into a traditional bank get turned down. This can be a mixture of reasons. It can be bad credit, it can be a lack of collateral, it can be a lack of experience, it can be not enough liquidity. So without further ado, it's commercial loan process time. The first step in the commercial loan process is going to be the application. So whether you use a commercial loan brokerage or you go into a bank, they're going to have you fill out an application to ask you some basic questions about yourself and also the scenario. When it comes to commercial real estate, it's going to ask information about the building, about the property, if it's income producing, and also any other questions about yourself when it comes to if you've done, a misdemeanor or have committed a crime. The reason for the application is just so that the bank can get a rough outline of who you are as a person and see if you can be a great risk for them. After the application is going to be the pre-underwriting.
What is pre-underwriting?
I don't know what it means, man. What does it mean?
Pre-underwriting is when a bank utilizes their team called underwriters, and what their specific task is to do is to scrutinize and to break down a new deal that comes their way, and also any other preliminary documents that they have. It can be tax returns, it can be a P&L statement, it can be a rent roll, which shows the various rents that are paid on a property. They do these in the forefront, so because at the end of the day, they don't want to waste anybody's time, they don't want to waste your time, they don't want to waste the bank's time, and they want to make sure that you can pass this step before issuing a letter of intent. So the next step in the commercial loan process is going to be the pre-approval letter slash the letter of intent. You'll get these two things mixed up every once in a while. You'll hear the letter of intent, or LOI, or the pre-approval letter. In the residential mortgage world, it'll more than likely be a pre-approval letter. In the commercial real estate or commercial financing world, it's going to be LOI, or letter of intent. What this indicates is showing that the bank or lender is they're interested in funding the deal. They want to look at the deal deeper. So they're going to issue a letter of intent, whether it be through email, or they'll mail you a copy, or you'll walk in and they give you the physical paper indicating their preliminary terms. And this basically shows the rate, the term, any conditions that they have to basically get this deal finalized. The beauty about the LOI is that anything's up for negotiation. So if there's something that you don't like about the rate, or if you want to extend the term even longer, you can always request to have a change. The next step in the commercial loan process is going to be your underwriting slash conditions list. Your underwriting team, usually the same one who did their pre-underwriting, is going to take a deeper look into the deal. Go to the property and conduct something called an appraisal, which determines the true value of a property in a given area. They'll also analyze any other bank statements that you have, any other paperwork that they require. They're going to make their final decision to make sure that this deal is going to be good for them and also good for you. They want a win-win for all parties because they're going to be your investment partner. They want to see you succeed. They're going to do all they can to scrutinize the deal as much as they can to make sure that this is a good investment for all parties. When it comes to the conditions list, this is a list of additional items that they will need. So there'll be times where they'll need proof of insurance. It can be times where they need information on the title company or the escrow company. There's times that they will need certain liens to be paid off after doing a preliminary title report. There's a bunch of requests that banks or lenders will indicate on this condition list. So the next step in the commercial loan process is going to be your appraisal or business valuation. Depending on the type of loan that you're getting, whether it be to get a term loan for your business or a loan to buy a piece of commercial real estate, they do something called an appraisal or business evaluation. It's going to determine the true value of whether it be the property or the business. They do their own analysis and crunch their own numbers together to come up with a value that will give the bank or lender the prime idea of what they'll be lending on and how viable their investment is going to be. And the next thing in the commercial loan process is going to be final approval. When you get to this point, it's pretty exciting because for the most part, 99% of the time, it's a done deal. They issue a letter to you, whether it be through email or in person or through mail, indicating the final loan terms of the deal. So it show you the rate, the term, the fees, any closing costs that need to be paid off. And there may be other conditions or final conditions that need to be satisfied. All that would be predicated or indicated in the final approval letter. So this next step is pretty crucial as well, and it is the final underwriting. I know. This is the third.
But Michael, they underwrite this file so much, I just can't take it anymore. Why do they?
They're gonna make sure that they scrutinize this deal to the very T. All right, they're gonna look at every nook and cranny in the deal and make sure that it's going to be best for you and also for them, the lender. So the final step in the commercial loan process is the money, baby, the funding, baby. So closing docs and funding. So this step is obviously the most crucial part because you're going to be going into whether it be a mobile notary or you're going to go into the bank yourself. You're going to be signing the docs on the final approval documents. They prepare to send their funds to escrow, and then escrow will wire the funds to you so you can start using them to either buy the property or expand your business, whatever you need the commercial loan proceeds for. It's also essential to know that commercial loans take time. You can't just walk into a bank and be like, okay, I want a commercial loan, can I get it by tomorrow? There's a process that takes place, and for good reason. With the recession that happened back in 2008, 2009, terrible loans were given out to people, terrible loans, and all they literally had to do is walk in, sign their name, and they would get loans within the next few days to buy a house. And that's not the way commercial loans work. It's a really scrutinized industry. It's a really regulated industry, and it is for good reason, because at the end of the day, you have investments, you have business, you have other people's money that are being used for these investments. So it's important that these banks and lenders take the appropriate steps in making sure that these deals are viable, not only for you, but also for them. All right, everybody, so that was the old video. I hope you guys got incredible value out of that. If you did so, make sure you hit that thumbs up button as well as the subscribe button, because I post on this channel every single week. So if you're looking for more entrepreneur/business type videos, make sure you hit that playlist right there. All right, everybody, keep crushing it.